Hi, it's John Kelly. In this module, we are going to discuss the concept of association. And as always, we want to be efficient and effective, follow professional standards, and document what we have done properly. Now, association is actually a legal term, and it really relates to who can sue you. And as a result of this, accountants who always want to try to interpret the rules very closely sometimes try to decide whether or not they can get around this and find a way not to be associated. And that's actually a really bad idea because there is safety in professional standards. In other words, if you are engaged to do an audit and you give the appropriate audit report and do and document an audit in accordance with professional standards, that should reduce to the bare minimum the possibility that someone could successfully sue you. So throughout complying with the relevant standard, audit, review, compilation, some kind of special report, professional standards contain now pretty much a standard and an appropriate report for just about every service an accountant can provide. So do that and use the appropriate report or reference and use consistent language. And despite the fact that you're associated with something, if you followed the appropriate standards, you should be fine. Now, one of the things to watch is consistent language, and we're sometimes careless about that, and we use the word audit for everything we do, and audit only applies if we are giving an audit report. So in an audit, in the engagement and rep letter, we will talk about acting as auditors. And on the invoice, we will invoice a fee for the audit of the financial statements. And on the income statement, often there's a reference to audit fees, though in an audit, often you will not go into that much detail on the income statement. But if you do want to go into detail or describe it, I would call it professional fees, not audit fees. And we'll see why that is in a second. Now, if we are doing a review where the assurance given is less than in an audit, in the engagement and rep letter, we would talk about acting as accountants, not acting as auditors. And on the invoice, we would say fee for the review of the financial statements, not the audit of the financial statements. And on the income statement, now, if it's called audit fee on the income statement, that could be confusing to people, and they might later say, well, I thought you were doing an audit because on the income statement here it says audit fees, so let's not do that. Let's call it professional fees. And similarly, in a compilation, we act as accountants. On the invoice, the fee should be the fee for the compilation of the financial statement, and on the income statement, again, professional fees, not audit fees. So that's why I like professional fees, because occasionally an audit will downgrade to a review, or a review will drop down to a compilation. And if we're already calling it professional fees, that's just one fewer thing to adjust. We're still going to have to make sure we adjust the invoice. If the invoice said fee for the audit and now we're doing a review, we'll have to make sure that we change that fee for the review. So throughout, use consistent language so as not to confuse people. Now, association happens in two circumstances. It happens when we do it by doing work or agreeing to have our work referenced. So if we do an audit, we've done work, we've given an audit report, and we're clearly associated with the financial statements that we did the report on. Now, if there's a prospectus or an annual report or a banking document or something else where we've said to the client, yes, you may include our financial statements in that information, then we are associated with it. Now, the second kind of category where association occurs is someone says we're associated or someone assumes we're associated, and that we can't control. We can only react, and we'll talk later about what we might do about that. So what to do if we've decided that we're associated? Well, we should check that if it's financial statements, that the financial statements and our audit report are accurately reproduced. And type in financial statements is one of the most complicated things there is. So very often, even with the best intentions, I find that people mistype the financial statements. So important that we check that that's done. It happens all the time wrong, so check to make sure it's right. The other thing we're required to do, for instance, in an annual report, is read the annual report for inconsistencies. And that could be the financial statements may indicate that revenues are $6 million, and that's up 5% from last year. And if the annual report says that revenues are $7 million and they're up 10% from last year, we would have to ask for that error to be fixed, because that's an incorrect reference to the financial statements, and we would ask for the errors to be fixed, or we would withhold our consent. Now, one of the other things that's important, and many times I see clients innocently doing this, they have their financial statements and then they're their financial statements. Now, we're associated because we've done an audit, and the client just cheerfully includes their financial statements in our report in an annual report. And they're really not supposed to do that. We are really supposed to do the procedures on the preceding slide before they do that. And often you find out about it after the fact, and then you would say to the client, well, please don't do that again this year. Oh, and by the way, did you not notice in the engagement letter that you agreed that you wouldn't do that without first giving us the opportunity to read to make sure that they had been accurately reproduced and to check for any inconsistencies? And most of the time the client goes, oh gosh, didn't know that. I will do that next year. Fine. If you're not told, you would tell the client to fix. And if there's something to be fixed, they would have to fix it retroactively and reissue or tell somebody. If they won't do it, you would see your lawyer and perhaps resign or some other solution. You might, when you're talking to the lawyer, say this was a banking document and the client included something incorrectly in the document related to the bank and said that you incorrectly did something. You might ask your lawyer whether you could go ahead and advise the banker that that was incorrect. Now, that will probably annoy the heck out of the client, so you should probably talk to the client first, but it needs to be fixed. You're associated. So, thanks for listening.